Released half an hour last week. That's down from 20% in the previous 7 days. We'll find out later if there'll be a public inquiry into the Omar bombing, which was the biggest atrocity of the Troubles. 29 people were killed and hundreds more.
Good afternoon, guys. All right, let's have a look. Hi, Emmanuel. Hi, James. Hi, Joris, Kath, Francis, Lodi, Ola, Tristan, Yannick. Hi guys, listen, I just started just a little bit late because I just wanted to see what was happening with the Bank of England after interest rates. We've seen price spike up into the 124s. I'm not sure this is going to be a sustained rally, so I will be looking for potential sells below 122.80 around this zone here, but we'll see. Long opportunities for me on cable will be if we break 124.40, but I know we're going to focus predominantly today on gold. So look, when you set your stall out, you have to look at the market and say, right, what's my objective? What am I trying to do? And the way that we trade, or the way that I like to trade through London Open or through US Open, is I want to find myself $1, $2, $3 and scale out along the way. So where do I see the high probability trades? And obviously today, with day after FOMC, we saw the dollar sell off last night. Was it a hawkish statement from the Fed, or was it dovish? Look, it's down to everyone's interpretation. I look at what's on the charts. The market interpreted it that based on last night that it was weak for the dollar. Everyone's sort of gauging potential price cuts coming back in, or a pause in interest rates. Whether that happens or not, you know, we don't know until it comes about. The minutes are released in 3 weeks' time. So where do we see high probability trades? So look, the first thing I do is just jump up timeframes and have a look, see what's happening. So daily, what do we see? I'm just going to remove all drawings right now. So I'm really interested in more what's happened now as opposed to what's happened months and weeks ago, especially when we're in these sort of strong impulsive moves where we've seen the market effectively triple bottom down at 1627, and now we find ourselves breaching $1,950. So if we look, that was previous resistance that had come in. Then through the Fed yesterday, we saw a spike above that area. Now, don't be alarmed when price goes above and just think, right, okay, we're going to continue, because there's a lot of times where markets, especially through news announcements, will penetrate key areas to not just get new buyers, but it's effectively creating liquidity for maybe other sellers. So if you're a market maker, you've got, I don't know, huge orders on your books. In order to fill those orders, you need the market to move in a particular direction. So there's sellers there, or in this instance, there's buyers there to maybe fill a huge sell order. Now, we're never going to know. We can only trade what we're going to see. So when people say, oh, I know this because of X, Y, and Z, all you can do is trade what you see, right? So by trading what we see, is we've got a strong close, and it has closed above. Now, if we go to the 4-hour chart, what do we see? Well, we see the resistance was a little bit higher here, but now what we're looking at is price potentially rotating up to this point. We haven't yet formed resistance on the 4-hour. So what I mean by that is we need to see a bearish candle close, and then we would look maybe to see the 4-hour pull back down into this support area to potentially trade long. If we go to the 1-hour, we can see that we've formed a little range here, and the 1-hour had resistance formed after FOMC, where we kept piercing, and again it happened. So look, if I was to drop in my 1-hour resistance, it's going to go in there. So I'm looking for long trades on gold. If we break and close above, call it 1958. Okay, so above 1958, I'm going to look for long trades. On the short trades, is a little bit trickier because, as I highlighted, we've got this area here, which was acting as resistance on the daily, but then when we drop down the time frames, we can see resistance on the 4 hours just a little bit higher. So we could potentially trade from this zone here down. So we've got 50. It's about $3.50. Now, really, that's not enough for me. I need to see at least sort of $4 space. And when we drop down even tighter, we can see that the market, yes, we've got a support level in here at 1952, but we also have it here at 1950, which leaves no range. Does that make sense, guys? So remember, the objective of trading is to find a trade and be profitable, right? So it's not about finding 65 trades and getting 59 of those right and losing 6, because ultimately you could be a busy fool. You could trade all that and you could be break even after 65 trades. But what we want to identify is where's the high probability trade. So if I look above here, above this zone here, then I know there's clear space to go long. Below here, there isn't clear space because we've got support here and the next level of support is here. So this area for me right now is a no trade zone. I'm not doing anything in that area, not interested. So what I want to look at is trading long above here and short below here. We look left, we can see we've got all this area to trade into. First support coming into this area here. A little bit of support, old resistance acting as support in here, and then the next area down here. So you've got loads of potential profit to trade into. So that's going to be my trade. So if I'm taking a trade today with you guys, we need to see a break above 1958 and a break below, let's say 1947.40. So in the meantime, what we do is we watch, see the market do what it's going to do. We don't need to rush. We don't need to do anything. It's all about preparation and planning. If you've got your markets identified of what you're trading and how you're going to trade it, and you know exactly what you're looking for, then if it doesn't materialize, you're going to be disciplined and stick to the plan. Now, I'm just going to ask everyone in here. There was just under 50 people registered, but there's only 15 in here right now. So of the 15 that are here right now, so I'm moving around, guys. I've got a massage thing on my back because I'm a little bit sore. I did a fairly long run for me yesterday because I've not been doing much exercise since we moved house back in November. But what I want to say is, how many of you got, and I want everyone to answer, and if you don't answer, then obviously you can't be bothered to, and if you can't be bothered to answer, then you might as well not be in the room. How many of you have a trading plan? Hi, Jeffrey. Hi, Elodie. Hi, Tobias. Hi, Yasmin. So how many of you have a trading plan? Mr. Stevens, good afternoon. For gold, not yet. Okay. I don't really have a trading plan. Oh, sorry, new to Zoom. Didn't know I could chat. Yeah, everyone can chat. It's an open space. Okay, so listen, if you don't have a trading plan, it's not an issue, but if you want to continue trading and, you know, not just make it, let's say, a hobby. You've got issues with sound. Has anyone else got sound issues, guys? Okay, so Barry, maybe just log out and okay, it's all good. So look, when it comes to having a trading plan is there for one reason: to keep you in check. So, you know, everyone will say, oh, you look on social media and people say, have you got a trading plan? Are you disciplined? Are you this? Are you that? Look, you could have a trading plan. The trading plan could be absolutely nonsense. It means nothing to you. So let me just give you an example. So I'm just saying, right, I want to be long above 1957.70. So when it gets, let's say it goes long above 1957.70, how am I entering the market? What candlestick formations am I looking for? What risk tolerance am I going to use? How am I going to scale in, scale out? How am I going to exit the trade? So these are all things that you want to know in advance. So before you literally start trying to write everything down, just give yourself one thing to look at. Master that one thing. As Bruce Lee said, he feared a man that knew one punch and practiced it 10,000 times, as opposed to a man that knew 10,000 punches and practiced it once. So let's give you an example of the kind of thing that I would look for. So we're here now, price comes up, we close above. Candle could be something like this. So if it's a little bit wonky, the lines. So we get that. Now, this gives me a clue that the market has closed above. So next thing is, what do I need to see next? Well, a lot of people might just say they want to see the candle break the high. So you go, well, if that happens, I'm going to put a buy stop here, because probability says the price has broken out of the range. We've had a positive close and it has created a new high and a higher low. So probability says the market should continue to do this. Now, this next candle is going to be significant in terms of how I look to trade the market. So I just got rid of those. And so we get this candle and it does this. So the first thing I'm going to say is, and I've got a few members in the room right now, so they know, they attend my live sessions, every London session, or if we're doing a US session for the guys that are on our funded program, then they know exactly what I'll say. I don't even need to say anything now, and I can guarantee they will tell you exactly what I'll look for, which is, here's the candle. Do I place a buy stop straight away? In fact, who's here? Who's in this? Do I place a buy stop straight away above the high of that candle? Yes or no, guys? There you go. Kath, just let me make it so you can message everyone. Right, just repeat that. Repeat what you just said, Kath. Oh, Kath, you're just sending it to panelists. If you can change it when you put two, just send it to everyone. Sorry, Kath, you're going to have to type it again. I do like... So let's do that again. Do I place a buy stop straight away? Exactly. No, I wait for a retracement. So I didn't mean to do that. So I'm going to have to draw that candle again. So let's say I've got this. The candle's done this and we're there. Probability says the market's going to keep going. But what I want to see happen is I want to see the next candle. So this is where it opens. I want to see the next candle start to pull down a bit. Okay. Now, depending what time it is, as soon as it pulls down, what this means is that even if it goes long afterwards, what does it form? If it comes down first and then breaks to the upside, what happens? What does the candle look like? It would look something like this, right? Or this one. So you can see this one is come down first and then it's gone up. So it forms a bottom wick. Now, that's what I want to see. I want to see it come down. And once we start to get a little bit more advanced, things that we can look at would be, so it comes down. As soon as it starts to move down, then I will consider placing a buy stop above the high. Next question for you, Kath. Let's putting you to the test. What other members have I got in here right now? think it might only be you actually, Kath. So will I place a buy stop even if it moves down, if it's within the first 2 minutes of a candle? There we go. See, this is what happens. It's not about, oh, here we go. Sorry, guys. What did I say about pound? What did I say about pound? I said I didn't think this was going to be sustained, and I was thinking that the market was going to drop down. But look, this is the beauty about trading, right? I'm talking to you guys, and we could have made some money there, but I'm focusing on what the plan was today. And the plan was to talk and educate you through the way that I look at trading gold. And we can do that with absolutely everything. So Kath just said, I won't place a trade within the first 2 minutes of the candle opening. And there's so many times, if you watch how many times, let's say you place a buy stop or a sell stop, or you go live into the market as it breaks the candle's high, how many times does it then just reverse straight back down? It may go in the direction that you want afterwards, but you're then sat in a trade for half an hour, a day, or whatever, where you don't need to be sat in an awkward position, because you don't mind being sat in a loss because it's part of trading, but you're sat in a losing position. And it's not great, especially if you're new to trading. It's not great for the psychology of trading, right? For your mind. Do you wait until the complete close of the candle? Yeah, so this candle, this one here, this one has to close above. This one has to close above. So let's say this was a 15-minute candle. I want to see at least the first 2 or 3 minutes price coming back down towards this range, anywhere in this area. The next thing I want to sort of see happening is, if it comes down into this area, I'll then place my buy stop above the high of this candle. Now, like I said, the more advanced you get in terms of spotting decent setups, then you can start changing your plan a bit, because where can you start getting the most profit? Where do you get most profit from? Is it from the entry, or is it from the management? What would you say? Is it easier to get profit if you've got a better entry, or easier to get profit if you're good at trade management? Yeah, if you've got a better entry. So a better entry, right, is going to be somewhere down this area. So let's say you trade, we'll just keep it round numbers. So let's say you trade at 1 lot. Now, the reason I'm doing the education right now is because gold's not really moving. The one thing we do have coming up, if I don't think we'll still be on, but if we are, at 1:30, you've got the open of the commodity exchange in the US. So as that opens at 1:30, you can sometimes get a nice little bull rally, that impulsive move, before then it makes up its mind. And when I say a bull rally, I'm talking, it could be anything from a couple of dollars to $5, unless there's some big news out and it could continue going. But, you know, I'm only looking for $1, taking my profit and moving stops to break even. So I'm literally, when I say I scalp the market, I'm in and out. You know, my average trade time is around 25 to 30 minutes. There are times that I've been stuck in a trade for a while and that's it. And there's, I mean, that 25 minutes as well also includes losses. You know, I'd love to say I was 100% record, but I'm far from it. You know, I'd look to try and achieve a 55, 60% success rate, and that'll be fantastic. I'm happy with that. I get a lot of break-even trades through trade management. So how long have you been a scalper? Probably about a year and a bit, Barry. Just as the markets are changing, I just get fed up of, when I say scalper, I'm literally just in and out of the market. And I don't mean 20 trades a day. I might do 3 on a busy day. So maybe one or two through London, and maybe 1 or 2 through US. And I only look at a few markets. So I was just fed up with the markets. Literally, I'll be in a trade, it's going fantastic. I could be 50, 60 points up, and then a bit of news comes out and it completely reverses, goes back to my entry, maybe take a loss, and then it goes off again in my direction. You think fantastic, and then it comes back. And I was spending days in trades and finishing up with net zero or a little bit of something or a little bit of a loss. And I just find it a lot easier to take 10, 20 points out of a market, providing you're disciplined. So if we look at this, and let's just say we trade up one lot, what I will look at doing is trading at 0.5 lots times 2, if the setup's good. So we did this on Euro the other day. If there is no retracement of the second candle after the break of the trend and it flies, do you just leave? Yeah, just sit out. There'll always be another trade. There'll always be another trade. There is something that you can trade, and people give it different names. I would just call it a 1 candle pullback. So if it does fly, then you could look at a 5-minute chart, and if you get a big impulsive candle, then a 5-minute retracement candle, you could buy above the 5-minute retracement candle. And again, just looking for that $1. So you split your one lot into two $5, 2 half lots. And as price comes as close to this old resistance, new support, buy live at the market somewhere in here, stops underneath this area. Then as it breaks, and if it does push up, you get triggered on your buy stop. Now, the low of this candle that's pushed down in here, that's where I'd move my stops to. And then as soon as it's gone $1, this one's gone $1, I'm taking half off and moving stops to break even. And the trade from down here goes to the same stop loss place. So automatically, you've just added about, off that trade, it'd be around 50% of your, 25 to 50% of your actual gain. So if you made $100, let's say, from just going above here, you'd probably have made about 150 if you'd have put in half a lot down here. So that's about trade management. Now, if it goes wrong and it goes against you, yes, you're losing half of what you would have put on, but what it potentially shows you is then that this close above was a false break, and then you can get a second attempt when the market does. In fact, let me just remove some of these. So we've put in our entry here. Let's say it goes wrong, it stops us out because the market's just kept doing this. Then what do we find? We've got the market, it's broken through that area. I look for the same thing. So I'm now looking for price to push up. As it pushes up, I'll place my sell stop underneath here. Stop loss originally will go above the level, so somewhere around here. As it turns around, and if it does turn around and triggers us in, I move my stop loss above the high of that candle, and we're in again. So basically what we've done is we've turned a position that was a losing position. We identify it now as a false break because it didn't, if it's not going to be a false break, it'll come here, it'll trigger us, it could still stop us out and then go, and we've already got our entry there. But if it stops us out and keeps going down, we know it's a false break, and then we get our opportunity to trade back short. So there's your trade plan in an instant, which is why we can go long and short very quickly on deciding our key structural points. If that makes sense, guys. So all we've done is identified exactly what setup we want to look for. We've identified our 2 points. And now, okay, you can just use the buy stops at first, get used to that one setup, get used to identifying and maximizing that setup. So if I show you what we did on the euro the other day while this market's just sat there doing nothing. So euro, I think it was Tuesday morning. Right. Came up to, was it Tuesday morning or Wednesday? Let me just go back to my journal. Tuesday. Oh, it was last week. It was last week. So here. So we identified the market to come back up into our resistance level. So we'd got our sell stops that went out into the members group, which was this one here, and to come back down. But as the price rallied back up, so this bearish candle here came down. We waited for the market to go back up. As it went back up, the next seller candle triggered our sell stop. But those that were with me live, as it came back up into this area, we placed half of our risk ultimately in here. So we'd got a short up here, stops there. We still have the same targets, but we scale out along the way. So did that make sense? We can see price come up, it comes up into our resistance area. Sellers came in, we wait for the candle to wick up. As it wicks up, we're now placing our sell stop order, which we get triggered the following hour. And that's it. So we just find our setups, find our ranges, and we wait until it materializes. So it's not about taking loads of trades. It's about identifying where you want to get long and short from, and then just wait. And just wait and wait patiently. Because if you can take one good trade in a day, then that's your day done. We were done at 8:13 the other morning. Our webinar started at 7:30. By 8:13, we'd made our money. And then we actually took, we sent this out as a trade, this one here on gold as well. So there's a support level through here if I look left. So there we go. So let me just go to the 4 hour. I think it was higher than that. Yeah, there we go. So price came into this area. We see the bearish candle, we see it pausing, we see it pausing. Now, when I sent out the trade alert, this was a bearish candle that was below the low of this candle. And I just said, look, price is stalling. And this was just a buy stop. But our target was 1914, somewhere through this area here, just below these wicks. And, you know, price came up here. It didn't get to my target, but because it was the final trading day of the month, it came back down and we got stopped out at 1910. Yes, it carried on doing this, but look, hindsight's a wonderful thing. We never knew it was going to go all the way up here. If it did, I'd have held on to it and I'd have stayed on to it through FOMC, right? But we didn't know. So it's just a classic thing, you know, when people say they catch the bottom and then just sit on it all the way through, whether they do or they don't. If they do, they've got testicular fortitude like I can't believe, or they're just maybe fabricating the truth a little bit. So as it stands for gold now, guys, like I said, the plan is shorts below 1949 and just practice looking at where you see these kind of setups. So look, if I was to just drop this in here, we can see support, right? Let's drop to the 30. What do we see? All right, there's the support level. We can see prices rejecting. We get a close below. The next candle pushes it up. Test. Now, it probably went down first, but I wouldn't trade it straight away. I'd wait for it to push up. It pushed up first, and then it goes. So somewhere through there, 1920, it goes down to, you get your dollar. You get your dollar. Again, you get another setup. Here, this is perfect. A base is formed. We get a buyer pushing price up, failing to knock out the previous high. The market momentum is to the downside. Here, we're just looking for shorts. The same goes to the upside. When price fails, so Kath, you know, when you just said to me, what happens if the market just breaks? So here, where it's broken, I'm looking for one candle pullbacks. So where you get this, a strong move, and then when buyers step in, they fail to break the previous high, that one candle, just sell that candle, come out at the close of the following candle. the market's done. It's done what it needs to do. Anytime you see a one candle pullback in a strong trend, M15, I like M30, H1, and anything between M15 to H1 is ideal, but I will look at the higher time frames for confirmation. So let's just say we're looking at, let's take a look at Euro Yen. This is another market I like to trade. So remove all drawings. We'll start at the daily. Right, what do we see? In fact, pound yen was a beauty, but I didn't take it yesterday. So let me just remove all drawings. Resistance. Go to the 4 hour. Again, we're looking at the market. Go down to the 1 hour. Where do we see anything that looks interesting? Now, where are resistance areas? This was the one yesterday. I didn't take it, but I think one of our members pointed it out or asked me about it today. So if you look at this, this is a prime example why I don't buy if it breaks the candle straight away. Look, this candle here breaks resistance. The next candle goes straight above. That's why I don't buy as soon as the market just pierces the high. Then it's closed below. There's your false break. So let's go back and rewind and say you did have your buy stop there. As soon as it triggers you in, you're going to move your stop underneath the low of that candle. Then it's going to stop you out. Okay. Then it closes below. So what does it tell you when it's closed below? It tells you that you were wrong with the first trade. The next candle, look what it does. It wicks up. As it wicks up, you place your sell stop underneath the low of this candle. Stop loss above the high as soon as it triggers. So initially your stop loss will be above this level somewhere, maybe even above this candle high. So it's going to be just for protection, basically. So you need somewhere to put your stop. So you put it above here. But as soon as you get triggered below this candle, you're going to move your stop to here. And literally you're done in that first candle. It comes straight down to where the big buyer candle comes in. You're done. You don't need to do anything else. Okay, it comes down to support, but who cares? It's done. Wow. There's now, like, all you're going to look for pound yen now is shorts. So you want to see price rotate back up into this area. You want to see if it can rotate back up into there. If not, you're going to have to see it forms resistance on the lower time frame, and then you wait for the next market move lower. Have you got any questions, guys? Because literally we're just waiting for these markets to move a little bit. Obviously we've got I think it's 130, isn't it? 115 for the euro, 130 for the unemployment claims. Then you got Lagarde doing the press conference at 145. So you might get a little bit of movement then, but until then, it's probably going to be a little bit static. So another thing that I always like to talk about, guys, do you understand the simple setup that I use now just for trading? It's a very, very simple setup. I can teach someone this in an instant. Obviously, there's variables in terms of entry techniques, but I just wanted to give something away very, very simple that you could potentially go away and implement straight away. You know, this is something that my members see me do day in, day out, every day. And do you get bored of it? Kath, do you get bored of me doing the same thing every day? No, it reinforces the learning. Yeah, and that's it, you know. And by being live, I can't go wild. So it's good for me, you know. So yesterday we did our money yesterday, and then I went for a 12K run just to go and it's a difficult. People think trading is easy or it's fun. It's boring, and it should be boring. If it's fun, you're doing something that you shouldn't be doing. And the only fun thing about trading is when you get paid at the end of the month. So how many of you pay yourselves from your trading? So if you were to make €100 or $100 or £100, at the end of the month, would you pay yourself anything? Or would you just leave it in your account to potentially grow? Okay, so I'm not calling us dogs, but I went through this analogy, I think it might have been last night with my members. So why do the Olympics, why do any competitions have a trophy? Why do they have prize money? Most people, right, they love the trophy. Why do they love the trophy? They lift the trophy as memory, it's a reward, right? Why do dogs do tricks when you give them a treat? It's that feeling of being rewarded. So if you're trading and you're trading day in, day out, it doesn't matter whether it's $100, $500, $1,000 size account, but if you don't reward yourself from it, you're soon going to get bored. You're going to soon lose your motivation. You know, humans are no different to dogs, right? If you pay yourself, let's say at the end of the month, you paid your electricity bill through trading, or you paid your Wi-Fi bill, your broadband, or you took your kids to the cinema. That's if you've got kids. Or if you just went out for a couple of drinks with mates and you used trading money for that, do you not think it would reinforce what you've done and what you've learned to continue with it, as opposed to just leaving it in a trading account and watching it grow, and then guess what? You do something silly and it disappears. And then you put in hard work again and it grows by $500, and then you have a losing streak and you lose $350. You're not getting anything from that. All your body and your brain is getting reinforced with is that you're spending hours in front of the charts and nothing's happening. Imagine you took some money out and you took your wife or your partner for dinner, and she goes, oh, how did you do that? And you go, oh, this was through my trading profits this month. Do you think then you're going to get support off your wife, your partner, your brother, whatever it may be? So these are things that you need to really think about, and how you pay yourself. You've got to think, don't just think about sitting there in front of the charts, because you know you might really be annoying other members of your household because you sit there all the time and getting nothing for it. So, and again, this is probably the difficult part with scalping or day trading, is you're sitting here, you're waiting for one setup to break a certain point, and if it doesn't do it, then you're not placing a trade, and you've sat there for maybe an hour and a half or 2 hours and you've not done anything. Is that good or bad? Do you think that'd be a good thing or a bad thing that you just sat there for 2 hours, you've watched the charts, nothing set up, so you didn't place anything? Is that a good or a bad thing? It's good, right? It might be a little bit depressing, but if nothing's set up and you've sat there for 2 hours and you didn't trade, then you've stuck to your rules. So that's a good thing. But if nothing's set up and you place the trade, then you've got to work on, right, why did I place a trade? Yeah, and that's self-awareness. That's what we've got to watch out for. And the only person that can control that self-awareness is yourself. You can maybe write down things that actually happen or the way you feel during the day to see basically how had you got a tax bill through, had an argument with your other half, you know, why did you take that impulsive trade? You know, one of my members this morning, you know, she's been on such a rich vein of form. So Lisa, I don't know if she's in right now, but Lisa's been doing really, really well. She's got really disciplined. And then this morning, she just said in the group, she said she screwed up yesterday. She didn't wait for a setup. She was sat there watching it. And then she knew she had to go to work in half an hour. So she placed the trade. She handed back some of her profits from the week. But again, that's down to self-awareness. You make note of it. And it's not a name and shame game. It's realization. If you want to make money through trading, you have to accept when you are at fault, and you have to be disciplined enough to realize when you're at fault and make note of it. So I like euro for shorts, by the way, guys. I like euro underneath here. But obviously we've got the news. I think we could fill this gap, this space. So that'd be something I would watch for. Unfortunately, I feel that the news, it's either going to push it higher or lower. I don't care which way it goes. It makes no odds. But I would like to see after FOMC yesterday. So this is something I discussed last night. I'll go over why. So if we look at the dollar index, right? In fact, let's just look at euro. We'll go to the weekly chart. So I still do my higher time frame analysis, right? It's not that I ignore that. I just want to know. So this market over the last end of September has moved just short of 1,500. It's probably moved over 1,500 points with the move last night. Yeah, 1,495 points. So, and it's done it without a weekly correction at all. One candle pullback, that's it. So where we see this move yesterday, that candle there, and it's a big number, 101.1. I see this as a blow off top, trying to suck traders in, drawing liquidity to then send the market back. Whether it comes down to the trend line, whether it comes to 107, again, I really don't care. Whether it goes up to 1.12, again, I don't care. But the way I see it is, I think the market's going to pull back this way. If we go back to December the 13th, which somewhere here, I think, there, December the 13th. So look, this is CPI data. Negative for the dollar, negative, and then 2 days later, boom, straight back pretty much to where we came from. Look at the indexes around the same time. You had big blow off tops, really bullish for indexes, and then it reversed. Seasonality also says that euro generally finds a top somewhere in January. We've now literally peaked end of Jan, going into Feb. Real nice time to see this market reverse. So that's my sentiment. That's what I'm looking at. So I'm looking shorts here. Let me check gold. Okay. What time is it? 12:46. So we've got a little bit of time yet. Elodie, no problem. Thank you for attending. Thank you for attending. Nice to have you in the room. If you are interested in being a member, you can just drop me an email. There is a nice little discount for anyone that wants to join from today's session. So normal price on the website is 147 a month. Today will be 75 a month. So just this is a, do you ever use SMC, supply and demand? Seems to be the new phenomena. I literally just use price action, Barry. There's always going to be a new phenomena that will probably work for, I don't know, a day, a week, a month, 6 months. It's like algos. I hate algos. They'll work in the current climate. They'll be tested to work fantastically well in the current climate. And then something will change. And guess what? It doesn't work anymore. So I'll have a look into it. Oh, SMCs, smart money concepts, right? Is that what you mean? Yeah, everyone's talking about smart money concepts. Yeah. I won't even, I just see it popping up everywhere. I can't say I know anything about it, to be fair, unless it's just another name for something else and they've like rebranded it in some kind of gimmicky name. I couldn't tell you, so I wouldn't want to give any misinformation. So I won't waffle around it like I know some people would potentially. I'll have a look into it, see if it's anything. Thanks, Tobias. Lovely to see you. No worries. Thanks for coming in. I'm just gonna watch this. There's one. What was the next one? Yeah, 115. I think we'll wait till 115. We'll see what happens with the euro. It's probably going to be 50 basis point rise. On that note, we'll see. We'll see what happens. If it's going to be anything like sterling, probably get a rally and then a good buy. So this is setting up lovely for today, tomorrow. So as long as this closes like it is now, it's anywhere down here, what have we got? How long have we got left? 11 minutes. Then we can look for price to run back up into this area. The downside is, let's see how far away price currently is. 25 points. Probably not do anything with something so far away. I'd be more inclined to wait for price to come back on a smaller time frame and then see sellers step in at this area. Because then that way, essentially what you're looking at is the market's moved from 124, so it's moved 120 points in a straight line without any real correction. So you just had that little bit there. So I'd rather see price come down, pull back up, have some form of support. How's Greg second? Does he still have his Lambo? Yeah, he's driving an Urus at the minute, from what I know. I can't say I've spoken to Greg for probably since about 2015 or 2016. But yeah, I see his adverts everywhere. He seems to pop up everywhere. Yeah, no. I won't say anything bad against him. He's very, if you're with him, he's very interesting. He's nice to speak to. Very, very interesting, actually. Organization wise, in terms of a company, well, leave that for people to make up their own mind. But you know firsthand, Barry, so I'm not gonna, I don't need to say anything. All right, let's go back to gold. See if it's still sat in this little trap. 1:15, 1:30, 1:45, you've got half an hour of real solid news that's going to move the markets a chunk. Definitely the ECB, and when Lagarde speaks at the press conference at 1:45, that will probably be the shaker in the market. So we'll see. If it's anything like pound, you'll probably get a spike on the initial interest rate, and then depending what is being said. So I've not had a chance to look at the policy summary from the Bank of England, but the fact it's 80 odd points down from session highs just kind of, it's obviously not looking too fruitful. So what's everyone else's trading style at the minute? So listen, I've told you what I'm going to do when it comes to gold. I've told you how I'm going to enter, how I will manage. So you know exactly what I'm going to do here. What would you say? What have you got your eyes on, guys? And how are you currently trading at the minute? Are you swing traders, day traders, long-term traders? I really do like euro short underneath this area, but unfortunately with the news, I don't think it's I've got an order sat there, but if it doesn't trigger, I don't want to get slipped. So I might close that out. I'll give it what we got, 15, 18 minutes. I'll wait till 1 o'clock because if we've not had a push down, I'll close it out. Right. Emmanuel swing, Tristan swing, too new to even know what kind of trader I am. Oh, Nick, there's no problem with that. You know, the first, I don't know, anything from 3 months to a year, you'll be figuring out what style of trading you'd like, what suits you best. You know, I've changed several times. You know, if I go back to, let's say, 2012 to 2016, I was day trader. When I say day trader, daily chart, H4 chart. I would, if I could, and I was in front of the charts, drop down to lower time frames, but only at daily levels or weekly levels. It's only this last 18 months maybe that I've gone down to day trading. My not mental capacity, but the way I feel about the charts is that when I'm sat here looking at the charts, I want my trade over and done with that day. I don't want to hold positions overnight. I want 10 pips, 20 pips. I'm done, and I don't come back. You know, and that's where it comes in really handy. You know, speaking to you guys, because I'm sat here watching the charts and I don't even feel tempted to take a trade. You know, so if you feel like that you trade too much, then a real good thing to do is find someone close to you. If you don't want to be in a trading community, is find someone close to you that you can teach or record yourself talking about the charts. So maybe set up a camera. So maybe use some like software like Camtasia that records your screen, and you've got a camera like I have now that's on you. And FOMO, yeah, fear of missing out. Don't worry about, never worry about missing a trade. That I can promise you, on my life, my daughter's life, there'll always be another trade. So don't worry about missing a trade. Worry about making money. And the best way of making money is not by over risking and not by being in the market too much. the longer you're in the market, the longer you're exposed to risk, the more risk you have, the more likely you are to have a losing trade. So it's all about being as disciplined as possible, sticking to your setup. And if it occurs, you stamp on it. Hopefully you make the money. And if you don't make the money, you lose as little as possible. So, you know, things to consider. So while we're still waiting for gold to do something, let's just give you an example. So we've got our level, we've got price closes above it, the next candle starts to move down. So as soon as it starts to move down, we then place our buy stop above the high here and our stop loss below the low. The candle then reverses, it triggers us in like this. So the first thing you want to do is move your stop loss from here to here. So I'm just watching euro is close to triggering. What we got? 3 minutes. So I'm just going to watch it. So if price does break the high, and we can automatically reduce risk straight away by roughly, let's say 50% on that image that I'm showing you there. The next thing I want to say is, right, what happens if next candle does this? So it comes back down and it closes bearish. What would you do? Would you do anything? So give you an insight. Let's say close like that. I would say it's closed like that. I would then close half of my position. So I lose a bit of money, but we've still got a higher high and a higher low. So I would now add another buy stop above the high here. So I give the trade, but the buy stop would be for the amount that I closed here. So let's say I had one lot running and I closed half a lot. If the next candle then breaks the low of this, I'll close the whole position. So I lose whatever the amount was from here to here and here. So half of it on the close and half of it when it breaks the low. The next thing is I've still got my order here to give the trade a second opportunity if the market does do that. If it continues to move lower and it takes out the low, I cancel my order. Does that make sense, guys? So basically all I've done is I've given the trade a second opportunity. Price action is still going up, but sellers have warned me with that candle that potentially they're going to come in. Does that make sense? So I'm just watching price action to tell me when and how I'm going to close trades. I want to close half to protect my, because look at it this way as well, guys. So let's say you make $1,000 in a month, and that's from, let's say you end up losing 4 trades, but you still make $1,000. And those 4 trades are a full $250 loss. So you've lost $1,000, but you've obviously made $2,000 because you're profitable $1,000. Now, if you look at how you manage that trade, if you could reduce your losses from 1,000 to 500, you just added another 50% profit to your earnings. So it's things like this where you manage your trade. Instead of letting it just do the full loss, you're using price action to tell you, right, this is what's happening. sellers are in control of that candle. Let's close half. If it breaks the low, then it's going to probably keep going down here. So why do I want to sit through that? So if you can reduce your losses by half, just by active trade management, then your net P&L for the month, instead of being 1,000, is now 1,500. Now, who would love to be able to increase their P&L by 50% without taking another trade? Yeah, the only way you can do that is by active trade management. Let's say you increased it by $250. You still increased it by 25%. And it's just little things like when the price moves, you move your stop. All right, where are we now? Right, let's see what we 102. Well, I can't believe that the whole time we've been sat here, gold has probably moved the maximum of about $1.50. I mean, the only good thing, I guess, is you got a bit of educational content from me. I would have expected it to have moved a chunk more than that, but we've got the ECB in 13 minutes. Any questions while we're online and just we've got, what is it, 13 minutes just to see what happens with the ECB. Nolan, you're on, aren't you, mate? Is there anything you want to add? Double what was made the year before. Gains were driven by higher energy prices, partially caused by the war in Ukraine. Nolan's probably feeding. In fact, Nolan's probably doing push-ups while he's watching this. He's on a get fit streak at the minute.
Hi guys, yes, I'm here. I'm just trying to turn my camera on.
Yeah, it's all right, mate. I just thought I would see if there was anything you wanted to add.
No. I've been looking at some other markets. Obviously, today's focus is on gold, but with that not particularly doing much, I've just looking at a few other charts. But yeah, I mean, like you've shown today, trading is about patience. It's about waiting for, knowing what you're looking for, and just waiting for it to come along, and and not being tempted. Or it's very difficult sometimes though, but trying not to be tempted to just dive into the market because something hasn't happened. Perhaps you've been waiting for an hour or two for something particular to happen, and it's so easy to just dive in when your rules haven't been met, because as traders we want to make money. As traders we want to trade. So this is just, even though you haven't taken a trade today, it's a very good lesson in discipline. So it's of course we want to make money, but also we don't want to lose money either, and the fact that we stick to our rules is actually a good thing.
Yeah, agreed. So listen, there's a lot of people in here that names I don't recognize. Can I do another session? Yeah, our next one is Monday at 8 p.m. Yeah, obviously it's nice. Yeah, we'll always do another one. This is obviously a little bit of a shop window for us. We do like to use this. Andrew, I recognize this name. Andrew, are you an old member by any chance? And are you from Australia? I just recognize this.
I recognize the name.
Yeah.
I recognize the surname.
Yeah, well, there's also a famous cricketer with that surname.
Oh, okay. No, I don't follow cricket, so.
Yeah. Christoph, Eduardo, Emmanuel, James, Nick. So what was what would you say is the #1 reason why you started trading? Because I think it was Nick that mentioned he's too new to trading to know what style of trader he is. What is it that lured you into trading? Did someone sell you a dream, or is it something that you're actually passionate about? Now, Emmanuel, that sounds interesting. Retirement activities. What are you, a Hugh Hefner type of person, or are you are you on the
It's a bit personal, Mark.
no, retirement activities? I'm just curious. Is it a big yacht on the south of France? Travel the world? It sounds interesting when you put retirement activities. Because ultimately, when it comes to trading, right, I don't want to get bored and still make money. Love it. Now, obviously, in order to make money, it doesn't matter what it is, whether it's a business, whether it's a hobby, you have to treat it like a business, because every time you lose a trade, that's someone on the other side of the market taking your money. And I don't want to be that person. Cheers, Barry. Great to see you, mate. Thanks for joining in.
See you, Barry.
Yeah, okay, yeah. So great. So wanted to learn something new because COVID affected your business. Listen, you're probably like 90% of 95% of other people out there, whether they had their own business or whether they were just in employment. You know, everyone's been affected by COVID in some shape or form. And right now, the world is really, really struggling when we look at inflation and what's happening. I mean, you look at the UK and we've just had our 10th straight increase in rates, and I know what it's doing to our mortgages, and we're not the only country, it's happening globally. So our surplus money is just disintegrating. And that is if you had surplus money. So people, there's no better time really to be looking at trading, but in the wrong hands, it's going to be the worst thing you can look at. If you want or need to make extra income, but you're in a position where you're forced to make extra income, let's say because you've got bills that you can't meet, then you have to ask yourself a serious question: is if the money that you're putting in the marketplace, the pressure that's been applied to you to make those payments, is that making you place trades? So for example, I'm sat here now and I've not placed a trade on gold at all because it's not met my rules. But let's say I had to make a payment today by 3 o'clock and I needed another $250 or $500. How tempted do you think I'm going to be to try and find a trade? So that's the thing you need to ask yourself. Can you be disciplined enough? Mr. Siddiqui, where have you been? How's your little princess? Sorry, guys, this is one of our old members has just joined in. Good to see you, Umar. Thanks for joining. So I was literally just highlighting the point that how many people would be able to stay disciplined enough not to place a trade, even if they needed the revenue to pay some bills. Because look, I'm sorry, but if that's the position, the bills have to wait. Because if you use your capital to place a trade and it's because it's in desperation, then I'm sorry, but the odds are that trade's going to go wrong. And I'm lucky I have someone else to pay the bills. Oh my days, Nick, that sounds fantastic. You are lucky indeed. I've got to go. Thanks for your time, you're smart. Tristan, pleasure, buddy. Yeah, I'm good, mate. Nolan's good. I'm sure he'll give you a quick response. So let's see what we've got. 4 minutes to ECB. It doesn't look like gold's going to do anything right now, so let's just hop over and see what happens here. So I'd like to see it. You see what's happening? The candle's pushed up first. The candle's pushed up first. I would here, the candle's pushed up first. I'd like to see it now come and break the lows. That would be my preference. As we're coming in, it's US Open or pre-US Open. Let's see what happens. $115. Oh, I've not closed my trade. Let me close that trade. Hold on. There we go. Just realized I'd not closed my sell stop underneath here. That could have been an awkward moment, because if it does drop down, probably get slipped massively. Do you know what slippage is, guys? So, Andrew, we were just saying, are you an old member? I just recognized the name from a few years ago. No problem. So just watching Euro, we've got the ECB news out in 2 minutes. So my preference and I'm favoring a move lower, but let's just see what happens. If it's going to be anything like Bank of England on the news, it might spike up, and then as Lagarde speaks, say in half an hour later, we'll probably see it pull back down. So if it does spike up first, I'll put my order back on. So if we see the market go up first, I'll put my sell stop back on underneath the lows. So I'll get ready for. All right. So I'm just gonna. So I use something here. So I'll just click open the cal. This isn't placing a trade. This is just getting the order set. So. Right. So now I have my entry, my stop loss, and my target in place, but I don't have it. I don't have the order set. So in order for me to open the trade, I just click on open trade, and then it'll get placed. You'll hear it. So basically what I want to see happen is in 1 minute, if the market goes up first, I'll hit open trade. And that means if the market does this, the market does that, I'll place my order here. And then in order for me to get triggered, it's got to come back down. So if it just keeps going up, nothing's going to happen. But I don't want to have my order here before the news, because if it does drop, I'll probably get, instead of getting entered somewhere here, I'll get entered somewhere down here. So I don't want that. So let's see, 1 minute. I'm just gonna. Oh, news is out. Not a lot has happened. Yeah, they've done it at 3. Right, so I'm going to hit open trade now. There we go. So open trade, that's gone in. Let's see if we get triggered. So entry price on that is 109.78. And my stop is 1.1006. Target is 109.52. So we'll see what happens. I don't think it'll get triggered until if it is going to get triggered, probably not until the press conference at 1:45. Let's see what's happening in gold in the meantime. So we'll keep our eyes on this. Gold, my days. Steady, steady, steady.
Like watching paint dry.
Isn't it? Pound's having a little rally, Euro's having a little push. I always like it when it has a push first, the opposite way that I want it to go. All right, let's go. So I'll just be looking at banking half at 10 points and then moving stops to break even. So let's see. Let's see if we can do that. So partial take profit, let's put that in. So if we do this, so look, and put my partial take profit in. So I'm going to do 11 pips that incorporates spread. Yeah, I do, especially if I'm out, because I use some copy software, and or I should say my account is copied, and I lost MT4 on my, I can only use MT4 on this particular copy. And I lost MT4 on my phone, so I can't manage any trades. So it's nice to put in a partial take profit, and you know at 10 points that as soon as your take profits hit, your stop moves to break even. It's just a very simple piece of software. All right, here we go. And triggered. Right. So just watching it now, 1.52. Lovely, right. I've just closed half. And we are first take profit. So I've closed another half. Let's move it to break even. So guys, that was a very simple way of making some money. So if you stuck around, I hope you made some money with me. Did you stick around? Did you take the trade? Nice. So are your stops at break even? So hopefully you've scaled out twice, stops are at break even. If it goes back to entry, it makes no odds. So got close to stopping out then. Ooh, 0.1 of a pip. All right, guys, lovely way to finish the day. I hope you enjoyed it. And if there is anyone that would like to be a member, I'm going to put in a link right now. It is for 50% off our joining of our membership. So 1 second, let me find it, because it's got to be the one that is 50% off. That one will give you a shock. That link was for 1,500 quid, not 75. There we go. So anyone that wants to join us, there's our Stripe link. It's in the chat. We'd love to see you in the membership. If you've got any questions, you can contact me directly on mark@tradeandtrain.com. Other than that, guys, what you've seen today is what you get every Monday night, Tuesday night, Wednesday night, 8 to 9 p.m. and Tuesday, Wednesday, Thursday morning, 7:30 to 8:30 a.m. And then if you're part of our funded team, so where we provide funding for you, we do this twice a week through the US session like we're doing right now. So on that note, guys, I'm going to stay on just for a couple of minutes. If anyone's got any questions about the membership, if not, then the link is there. It's in the chat. All you need to do is click on the link. It's with Stripe, and I will add you to all the relevant Telegram channels. If you've got any questions, please just fire them in the chat box, guys, and either myself or Nolan will reply. So how many of you thought that trade was going to go down on the euro when it first started going up? Good. Thanks, Kath. Thanks, Emil. I thought euro was going to go. Yeah. Well, it might still go up, but who cares now? We made our money. We got those pips. Job's done. It might even sink. I'd prefer it to sink because I'd look to trade it again as well once. Let's look at gold, in fact, for the next minute or two, because 130. 130. So I'm just watching gold because 130 commodity exchange opens in 6 minutes, and we've got the unemployment numbers. So I like the idea of a short. I like the idea of short below. Yeah, 1949.80. I was just looking at my broker data. So at 130 as the exchange opens, potential to see the price rally up into around 59. So as the exchange opens, potential to see price rally up into here, but I'm not bothered about that. If we get a close above, then I'll be interested in potential longs. But if it rallies up into this area, then I'll potentially start looking for shorts below here, unless it closes above this region. So let's see what happens. We'll stick around. I've gone on a bit longer than I was intending to, but I found my chatty boots today. Cheers. Right. 4 minutes. 4 minutes. Let's see what happens. Now remember the flip side. If I see this, oh, not that. If I see it close below, Next candle. Looking for that. Then I want to do that. So 3 minutes.
So what would it be? Italian, Indian, fish and chips, or a bag of groceries? Oh no, you want everything. But what's got to be this time? Make your choice on the app.
Let's see what happens. So again, I'm gonna get my tool ready. So I'm looking for shorts. So I've put all I've got on there right now is just a yellow line, a red line, and a green line. There's no orders placed. It's just there so that I can move them around. And then as soon as I click open trade, I'll tell you exactly what I've done. So there's going to be nothing at least maybe for the next 20 minutes.
So you were tricked into investing in cryptocurrency, but with not access to your profits, you could have been scammed. Don't let them get away with it. Let us help you try to get your money back. We listen, we can, we win.
Right, 2 minutes. We'll watch this 1:30 news come out, and then I'm gonna have to get off, unfortunately, guys. Oh, I think I've worn my massager out. There's no running for me today. All right, 1 more minute. Let's see what happens.
Fancy a bit of fun? Go to betthecasino.com for a chance to win big on your favorite slot games and casino table. Over 18s only. Please gamble responsibly and remember, keep it fun.
Oh, my little one, she's amazing. She's a little bundle of joy. House move, that was interesting. I would not advise that just before Christmas and with a 1-year-old, but we survived. We got through Christmas. But yeah, happy, enjoying the new place. Just need to make a few amendments to the office, the recording den, and once guys, just out of curiosity, how many of you follow us on social media? I'm just going to put a few links in, so if you don't, I'm always dropping a few so in case, so this is, oh dear, sorry, I've just so I just posted the Stripe payment link again. So this is Instagram. Oh, here we go. We're starting to move. So I need to see a move. So that's Instagram, and I just posted TikTok. Because if you want to follow us on Instagram and TikTok, we're there. Right. The importance of waiting for a close. Let's have a look, see what the numbers were. Forecast was 196,000 and it's coming at 183. So unemployment's down, so that's good. Probably not what the stock market bulls want to see. They would rather see unemployment increasing, and the reason for that is if unemployment and the labour market is staying strong and interest rates and inflation isn't in fact affecting the labour force, then it gives the Fed more room to keep moving rates up. So on that note, guys, I still like euro shorts, gold shorts underneath here, euro shorts underneath the low of that candle. So if you're aggressive now, this is what I'd be saying. In fact, look, so I've just gone live euro short at reduced risk, and then I'll put the other half on underneath the low of this. So my stop, I'll move it now just above that high. But this is exactly what I was talking about. You want a better entry, and now if it breaks its own low, then see, that's already in profit now. That trade's already in profit, 2 pips, 3 pips, 3.5 pips, 4 pips. So this, I'll look to scale this one out relatively quickly, but we'll scale out and we'll add in as it breaks the lows. So we're up 5 pips. We're up. So there you go. That's I'll stay live because I'll let you see how I manage it. So you probably, did you hear it as I went live? So I'm just going to move my second entry to 109.65. So underneath the low of the current candle. So basically, if the 15-minute candle breaks its own low, I'm in with the other half of the position. Right. So that's that one entry, 109.65. All right. Okay, guys. So if it breaks the low of its own candle, I'll be adding half in. Current stops up here. If we break the low of this, stops go from here to above the high of this candle that's running. So this is what I call aggressive entry, hence only using half. So I hope you find it useful, guys. I will be sending you an email out about today's session. So everyone that registered, good timing, probably Amazon. Right. Okay. Okay, Spencer, shut up. Sorry, guys. All right. I'll say farewell now, and until next time. Thank you. Hope you enjoyed it. Bye, guys. Bloody Amazon.